go across. We're joined by Neeraj Diwan at a time like this. He's market expert. Neeraj, pharma is surely in focus. Let's start with how you're looking at Biocon's numbers, because the numbers at the outset were strong, right? I mean, versus expectations, they may well have been a bit of a miss, a bit of a dampener. But at the outset, the numbers look strong in themselves. How are you looking at Biocon and based on current risk reward?
Yeah, good morning.
Good
I think
morning.
you've seen over the last couple of quarters, you've seen a decent move in the stock also. So I would say that, looking at the numbers, maybe because, they were not, they didn't beat the expectations. So maybe there's some consolidation may happen at these levels. But the long-term view, I think if you get some correction in the stock, again, be a decent buying opportunity. But right now, I think one should wait. Let the stock consolidate a bit at these level and then take a further view on the stock.
The one, Neeraj, is, and I'll stick with pharma, excuse me, is Aurobindo. Again, the delivery was extremely strong. 16% growth on the top line. Coming to margins as well, you've seen some very strong growth on the margin number as well, coming to 20.6% in terms of the margin number. How is that one looking at this point in time from a risk-reward perspective?
See, I'm again, I have a similar view for Aurobindo Pharma also, like I said, for Biocon. But, I am more positive on the APS, side of the pharma stocks. You saw such good numbers coming in from stocks which are into API. That I think is one where I think the growth, the momentum, the margins are very good, and that may continue also going ahead. So Aurobindo Pharma again, I would say that it should consolidate around these levels. Again, there's that fear now 2 years down the line, but there's a fear of again some restrictions from US on the pharma, from the generic pharma space. So that will always weigh on the mind of people. So I think that big rally may not happen, but again, the momentum is with the API side of pharma.
Neeraj, we've seen some of the power ancillary stocks which were running up, correcting after the earnings coming in. What do you think is the reason for that? And the order book for many of them has not been there is a big order book there, but the growth has not been so much in Q1. Are you seeing some kind of fatigue coming into some of these stocks given the kind of valuation they're trading in?
I think you're absolutely correct in the valuation because, this quarter also the margin pressure is there because of the commodity inflation. So that is impacting the profitability. So I think that, again, the stocks had run up a lot during the March, April, May period. So I think now some consolidation is happening. But, if you go to the capital goods side of space, power equipment, capital goods, that space, if you're seeing a good correction there also because of the margin pressure. Some of the stocks have gone with decent top line growth, but margin is what put the profits down. So there, I think there are opportunities where one should look at, catching on those opportunities in this correction.
And also what we've seen is that companies which stocks which are running up ahead of the earnings, there's a sell-off coming in. Is that also now a trend coming in that the market has already factored in that earnings growth, and if they're meeting it or if they're not exceeding it, there is a sell-off which is coming onto those stocks?
Yeah, what happens is that you get a couple of earnings from the same sector. So you get an idea of what the trend is. You saw similar trend in a lot of chemical companies also. You saw a couple of them coming with good numbers. And we've seen post that a lot of them have come out with good numbers this quarter. Similarly, power equipment, energy space, you saw there was some margin pressure. So again, the trend is continuing. So there may be one or two exceptions which may behave as per their particular, individual stocks. But the general trend has been like that only. So there is poster chemical rally that we saw in some stock. People are expecting that most of them will come out with better results. So that's how I think things are playing out right now.
Neeraj, from what you're telling us, you seem to be a little bit cautious with regard to pharma, even though the numbers have been, extremely strong. Anything within the pharma pack that looks attractive? Because Naveen also came out with numbers. I mean, blockbuster set of numbers, at least versus expectations, a resounding beat, 10% across the board, higher than what expectations were penciling in. I'm trying to get a sense, how do you play the theme? Because that seems to be the flavor at this point in time.
The pharma, like when I mentioned API stock, you saw good results from PB now, Neural Lab. So I'm positive on this space. Then second, in the pharma space also, there's stock-specific stock buys which I have. I like stocks like Pfizer, I like Cipla. Valuation comfort is still there. So I think a lot of Cipla's is domestic business. So that stock I like for the longer term perspective. Then Naveen Fluorine, you mentioned like chemical, I'm positive on. So anything to do with chemicals is something where you're seeing a good improvement this quarter. So this quarter is sort of looking like a turnaround quarter as far as margin is concerned for chemical space. So there, I think one can look at stock specific ideas.
Trades at 49 times, but you've seen robust growth. I mean, the numbers look extremely strong for a Naveen. There's also Power Grid, where the numbers were a bit weak, and revenue, PAT, as well as EBITDA missed street estimates. Of course, we'll have to wait and watch as to how the call pans out and what the capex guidance essentially is. But Sunidhi here with the highlights from the numbers, from the fine print itself.
Power Grid posted a weak Q1 for FY27 with revenue, EBITDA, PAT all coming below the street's expectations. While revenue stood at around 11,500 crores for the company, up 3% year-on-year, but below estimates, EBITDA increased by only 4%, while PAT declined by 1% for the company, also missing the street's expectations. One positive was on margins, as EBITDA margin expanded 120 basis points for the company, reaching 82.9%, mainly due to lower operational costs rather than strong revenue growth. The key concern remains around the core transmission business for the company. Transmission revenue grew only 2% year-on-year and 1% sequentially, suggesting limited asset capitalization for this quarter. Since Power Grid earns when its assets are capitalized, slower capitalization directly impacts revenue growth for the company. On the positive side, the company has approved around 857 crores for a transmission project for reconductoring two 400 kV transmission lines, with commissioning targeted for February 2028. Overall, it was a soft quarter, and investors will have to closely watch any management commentary during the August 7 earnings call, along with any updates on project commissioning, along with asset capitalization updates and any growth outlooks.
All right, we'll wait and watch for some of those. But let me go across. We have Mithali here, PB Fintech's numbers, and we have Ashesha as well as Darshita. But first, Mithali, PB Fintech's numbers, how do the numbers look?
So for Q1 FY27, PB Fintech has largely declared a mixed set of numbers. If you see the revenue and profit, they have clearly beaten the street estimates, but the EBITDA as well as the margins, if you see, they have came in below the street estimates. And the insurance business, that remained the key growth contributor for the company. Core and online insurance premium, it has grown by 41%, while the new protection products, including the health and term insurance, that has surged 53% for this quarter. The renewal revenue also remained a strong contributor, growing nearly 38% on a yearly basis. Paisa Bazaar, that continued to gain momentum even in this quarter, with credit revenue up 25%, while the loan disbursals have risen by 33%. The company's new business also continued to scale largely, with revenue growing 35% and also their profitability improving. The UAE business, that also remained profitable for this quarter. Looking ahead, management remains quite optimistic, backed by investments in AI expansion into the Tier 2 as well as the Tier 3 markets, and also continued focus on their protection business. The company is targeting break-even for PB Health by March 2027, and also planning to launch new saving products, including bonds, later this month. But overall, a mixed set of numbers coming in for PB Fintech for Q1 FY27.
Okay, mixed set of numbers on PB Fintech. There's also Cummins India. Sunidhi, talk to us about those numbers.
Cummins India reported a weak Q1 for FY27. While revenue beat expectations, margins disappointed due to higher input costs. Revenue rose around 18% year-on-year, reaching a level of around 3,400 crores, driven by strong domestic demand and better execution. However, EBITDA declined 1%, with EBITDA margin declining further, reaching a level of 18%, well below the street's estimates. Profit after tax remained relatively flat at 609 crores for the company and was largely in line with the expectations. The key reasons for the margin pressure was higher commodity costs, primarily due to the geopolitical disruptions going on, which offset the benefits of revenue growth. Looking ahead, the management remains optimistic and expects steady business momentum despite inflation and supply chain challenges due to the geopolitical disruptions. The company continues to focus on cost control, operational efficiency, and disciplined capital allocation, along with leveraging its strong balance sheet. Overall, it was a quarter of strong top-line growth for the company. However, due to weak profitability, going forward, margins are going to be a key monitorable for the investors.
Thanks, Sunidhi. So keep a watch out for Cummins India numbers there. But looking at more stocks to watch, Darshita joins us with more stocks. Darshita, what do you have?
Right, let's take a look at the stocks which could buzz in trade today on the back of earnings. And starting off first with Navin Fluorine, the company continued its strong momentum and delivered its 7th consecutive quarter of revenue and profit growth. Now, revenue, profit and EBITDA all came in ahead of the street estimates, which was supported by strong performance across high-performance products, specialty chemicals and the CDMO business. Management also remain optimistic with 3 molecules expected to reach the FDA readouts over the next 6 to 12 months. Now, meanwhile, the picture was quite different for Godrej Agrovet. While the revenue saw healthy growth, margins pressured weight on the profitability, with both EBITDA and net profit missing the street estimates. Now moving on to GNFC, the company reported a good sequential performance helped by better product realizations, even though volumes remained under pressure. However, Cohance Life Sciences disappointed the street. The company slipped into a loss from a profit a year ago, while the revenue has also declined sharply. Now on the brighter side, SIS Limited delivered a strong quarter with beating the street estimates on all the 3 fronts, which is revenue, EBITDA and profit. And adding to the positive sentiment, the company has also announced a buyback. And finally, GK Lakshmi Cement reported better than expected revenue and profit. While the margins remained under pressure, the earning beat could keep the investor sentiment positive.
Okay. Ashesha, you want to round up the rest of the stocks and news?
Well, yes, let's start with United Spirits. A negative development coming in over here, where FSSAI has now issued a notice to the company with respect to one of its plants, which is a third-party facility in Madhya Pradesh, where the FSSAI has now cited non-compliance of product labels under the Food Safety and Standards Act 2006. So some negative development coming in for United Spirits. Meanwhile, let's also talk about Vari Renewable Tech, and the stock will be in focus on the back of an order win, where the company said that they've secured an EPC contract from Solaris Horizon Energy to develop 210 megawatt grid-connected ground-mounted solar project. So order win is why this counter will also be in focus. Sterlite Technology, meanwhile, has signed a multi-year or rather 3-year international supply agreement. And this is for supply of high-density optical fiber cables with an approximate value of about $210 million. So a big order win is why Sterlite Technologies will continue to remain in focus in today's trading session. Remember, this is one counter which has been in focus for the last several days. Gland Pharma, meanwhile, has signed an agreement with Newland Laboratories to for a strategic CDMO partnership to manufacture sterile APIs for depot projects. So positive development, wherein Gland Pharma has signed an MOU with Newland Laboratories. Both these stocks will be in focus in today's trading session. Meanwhile, let's also talk about Giant Resource Recycling, and there's a positive development over here. The prohibition order, which was on company's Unit 2 manufacturing facility in Chennai, has now been revoked, and normal production is likely to start over here. So positive development coming in for Giant Resource Recycling.
Okay, thank you so much, all 4 of you, for joining us and giving us that perspective. Mithali, Darshita, Sunidhi, as well as Ashesha. Thank you. What we'll do is slip into a very short break, come back, talk more. Plenty to speak about, as you can see. We try to cover as much ground as possible. We'll cover the rest on the other side of this break.
Back with the market right here in 18 hours. Let's just revisit what the GIFT Nifty is indicating, while of course that cash confusion still is very much at play in the last lap of the trade in the last 15 odd minutes. The GIFT Nifty right now is scaling higher. 24,700 plus levels is where it's currently sitting at, about 70 odd points higher on the implied open. Auto Anchs once again are going to be in focus. The preliminary US Class 8 truck orders, the reports are looking strong. It's a solid growth of 73% on a year-on-year basis, although it is a dip on a month-on-month basis. So let's see how some of the auto names, Bharat Forge for instance, how that reacts to this particular news flow on the Class 8 truck orders in the US. But Neeraj, having said that, autos has been a very charged pack. I mean, across PVs, CVs, two-wheelers especially, the EV plays too, and then auto anchs as well, giving them due company. Would you still say there's a buying opportunity here within autos?
Yeah, I think so, because the kind of monthly numbers which have also come in shows that the strong strength is continuing. You know, the surprise was by Tata Motors passenger vehicles and Mahindra. The four-wheeler passenger vehicle space also saw good numbers. So I think momentum should continue there, and some of the stocks are not so expensive also. If momentum is continuing and the kind of results that they're coming out with, I think there's definitely some upside potential still. And I'm even positive on the commercial vehicle space, because the volume growth last year was good. The outlook for this year is also good. So I think there also, I think there is a steady uptrend that is within.
Okay, that's that on autos. And Kunal, let's revisit. While we've been tracking autos almost daily, and you have been giving some very good calls there, but autos, auto anchs, at a time when you're seeing fresh breakouts for names like Sona Comstar, another 4.5% uptick coming in yesterday, where within that is still a trading opportunity.
So I think now the move is now moved on to the two-wheeler stocks, for example. That's the space which has looked very attractive on the charts, because you're seeing a fresh round of momentum into these names. Hero MotoCorp, I think, is something which has been looking very strong from sub 5,000 levels just about a couple of weeks back towards 5,300, 400 mark, where the stock closed yesterday. Bajaj Auto, I think, has been into a very sweet uptrend, trading at 11,500 levels, already very close to that 2024 highs of 12,000 odd mark. Eicher Motors is trying to make a comeback, but it's a different stock altogether. It has a tendency of going into a lot more sideways price action. So I think at 7,500, 8,000 range, Eicher Motors is also something which looks attractive on the medium-term charts. On the short-term basis, TVS Motors has done phenomenally well. The stock has moved from 3,700 just 2 weeks back towards 4,400 plus, where it closed yesterday. From the fresh sort of a breakout, I would look at now two names. M&M, I think, is something which would come back into a breakout mode pretty quickly. It's still trading just sub its 200 moving average. So I would say that the stock should try and play a catch-up with the other performers in the four-wheeler pack on the auto names. Tata Motors PV, I think, at 345, 350 levels poses a very attractive risk reward, because I think it's a matter of time that the stock would try and even scale up to cover up the underperformance. And even if that happens, the stock could easily surpass levels of 400 potentially in the next 1 to 3 months.
Neeraj, what's your view on some of the auto ancillary, Sona, BLW, or for that matter, other auto ancillary stocks? Motherson?
See, I think, yeah, basically, again, it's very stock specific, because some of them, like Sona, BLW, is trading at a very high valuation, multiples that they're trading at. And, so that kind of valuation may not sustain unless they come out with really fabulous results. And barring that, there's, like I mentioned, commercial vehicles. So auto ancillaries which are catering to commercial vehicles is one where I'm positive on. Second would be even the tire companies, the results for last quarter were good. I think that growth is still continuing there as far as volumes are concerned. So I think there, if the crude is correcting now and it stays below 80 or comes close to 70, I think their margin improvement, which was visible earlier also, should continue. So I think these are the kind of stock-specific view one can take as far as auto ancillaries are concerned.
Right, okay. In the meantime, there's been a lot of paper as well hitting the markets. You've got two new listings as well today. There's Juniper Green Energy, You'll have MV Electrosystems as well, and then so much primary paper in the pipeline waiting to hit the market. Neeraj, curious to know if you've been a subscriber to any of these IPOs or bought any of these stocks on listing?
The only stock which I bought recently, post the listing because it's come below the price is SBI mutual fund stock. I think it's already come below the listing price. Otherwise, most of the stocks that like MV electronics looks like a good stock, but then the issue was oversubscribed so many times that one can't get it. So let's see what it lists and then take a view on that. But very few stocks which among the new listings I've really looked at.
Neeraj, the other set of stocks is from the consumption and the discretionary part. Kalyan, going up roughly around 40-50% in the last 1 month. Numbers were okay, but margins were under pressure after the Q1 numbers. You have a view on Kalyan?
No, I don't have a view on Kalyan, but the only, besides Titan, the only jewelry stock which recommended and bought some time back was TVZ, because that valuation was very attractive and they were talking about going zero debt. So that did well over the last few months also. So barring that, I don't have any view on other jewelry stocks.
Right. Okay. Kunal, in fact, I wanted to ask you as well. Now that you're seeing that uptick come by on gold, A, does it seem like it has further headroom to go? And then B, what do you do with some of these jewelry retailers or gold financiers? Do you buy them again?
Yeah, I think so. I think it's a good time to try and nibble into these names. For example, for gold financiers, I think Muthoot Finance is placed at a very, very attractive risk reward. The stock was almost at 4,000 plus, start of this year. And now it's trickled down to 2,700, 800 mark. So it's a decent 30% correction for the stock in the very near term. And it looks like that I think maybe the worst could be behind, at least with the recent gap down the stock has shown. So the risk reward is extremely favorable for Muthoot Finance. Manappuram Finance, I think, has been looking fabulous on the charts. It's now very close to the breakout of the previous major highs. So I think at 350, 360 levels, Manappuram Finance looks extremely strong in terms of risk reward. Talking of gold as a asset class, I strongly sense that I think we could be at a cusp where gold could start to come back into a big breakout mode. We've seen multiple times that when asset classes go into multi-year rallies, for example, what happened with gold from the September 2023 lows, there's bound to be a point when gold comes back after a patch of consolidation. So I think we are hitting that phase for many of the gold financiers as well as the gold retailers.
That's quite interesting, the view on how to play this uptick in gold. But Kunal, Neeraj, stay with us. Lots more to chat about. Let's cut across to the Aurobindo Pharma conference call as well. We've got the CEO of the biosimilars division addressing the media right now.
That would be commissioned by end 2029, provided I get all the statutory clearances and environmental clearance to begin construction this October. So 2029 end will be when the facility will be available for qualification, means a 2-year horizon. 2030 will be the PPQ batches, the validation batches. Revenues will start. But again, 2031, I expect after the filings, the customer to build the stockpiling effort to happen for the commercial launch, which means 2031 will be when the unit 2 will start to generate the revenues. So in a nutshell, the structure for Theranim is designed specifically to de-risk the capex ramp with contracted volumes from unit 1 providing revenue visibility from 28 onwards before the full capital cycle of unit 2 completes, and unit 2 will start generating revenues from 2031. I hope that answers your question.
Yes, very much. Thank you. Thank you very much for the explanation.
Thank you.
Thank you. The next question is from Srikanth Akoliter.
Hi, good morning, and thanks for the opportunity. I have a question on the CRO business. So we have recently acquired a small CRO business. Can you provide some thoughts that led to this acquisition, and how much of the scalability that you can bring in this business?
Shrikant, see, we recently bought this A1 Biocam. A1 Biocam, as on date, is having a turnover of around 100 crores, right? See, the A1 Biocam has started their journey in the year 2015. So, in 10 years, they established the entire credibility and they have developed the business, everything. It's only a CRO. Now they have a capacity limitation to enhance further. That's the reason why they joined us. And we are already having enough experience in the API. And what we thought is by acquiring the CRO and along with our existing plant, etc., which we can organize it, we can make it into integrated CRDM. And that is what we are working. And the A1 Biocom is already having customers, more than 50 customers, and they have executed more than 800 projects in the last 12 years. So these are all some of the things which will complement which our capabilities will complement with the existing CRO capabilities. This will do. And third thing is, it also comes with attractive valuation. And we expected the access to capabilities compared to the greenfield investment. If we take a greenfield investment to come to this level, I think to start up, it will take 5 years. Now we are hired by 5 years in the whole process. Now, having said that, now it's our job to take it forward with accelerate the entire process. That's what we are working on. The closing has not happened. Closing is expected to happen in the next 1 or 2 months' time. After that, we will start looking into what to do next on this.
Understood. And sir, that 100 crore revenue, do you think there is meaningful upside to that going forward?
I think at least, see, the existing promoter itself is going to be the CEO of the new company. And he has a very big vision of taking it to at least 3 to 5x in over a period of 3 to 5 years.
Understood. Sir, and second question, we have presence in Canada and China. So you can talk about what's our plan in the Canadian market, which seems to have turned kind of attractive. And in China, where we have a formulation play and a facility. So if you can update on that.
So the China plant, we are having a capacity of more than 2 billion tablets. And last year we did around something like 500 million plus. And already we are seeing in this quarter, we have already doubled that. So our objective is to go beyond 2 billion probably by end of the year or mid of the next year. That is what our plan is like.
Okay, that's Auro Pharma management, pretty bullish on what exactly the various streams or segments of the business are going to deliver and the visibility going forward. Just checking in on what the market is headed in for, and the pre-open rates should have trickled in by now. So we'll give them some time to settle in. 24,673 is where we're currently at. Pretty much a minute or minuscule of a move is what we're seeing right now in trade. Neeraj, do you also sense that, this entire cash auction mechanism confusion is also sort of rattling the markets in the final minutes of trade, and that's also keeping the upside sort of capped?
Yeah, there is definitely some confusion which is there, but I think yesterday was still better than the previous 2 days. So I think slowly as the participation increases, it should settle down because SEBI is very clear that they want to get this going and they want more participation to happen, and they have no more to roll this back. So I think slowly things will definitely improve. But yeah, that 315, 320, 325 move for some of the FF stocks is really baffling for some of the players.
Look at, today we have the Sensex expiry coming in for weekly. While liquidity is very low for Nifty during the cash, how do you look at Sensex? The volatility will be much higher here.
Yeah, definitely, that the kind of volatility you saw even on Nifty was quite high. You saw that 165-point move in just a couple of minutes. So similarly, today also Sensex would be, it'll be tough to say because some participation may improve, but kind of volumes which are there in Sensex, that volatility definitely will be there today.
Expect some more volatility in the offing, but Neeraj, always good having you on the show. Thanks for your time.
Thank you.
Okay, let me